Singapore. Okay, that's awesome. Okay, thank you all for showing up on time. This is a other space to get started. In this webinar, we will go through the different types of volatility indicators, such as the standard deviation, the moving average envelopes, which is your Bollinger Bands, and also average true range. Okay, so what is volatility? Volatility measures the size and frequency of changes in the price. So it is the pace at which the price moves and how wildly they swing. So generally, changes in volatility tends to lead to changes in price, which is what we like. So the higher the volatility, the riskier the security or the pairs is. So you can measure volatility by using standard deviation or other technical indicators which we'll be going through. Okay, so firstly, we're going to start with standard deviation. So standard deviation is the most commonly used tool to measure volatility. So it measures the difference between the actual price and its average value. So where the price is and how much it averagely moves. So the larger the volatility, the higher. Can you guys count how many times I have to say volatility? So the larger the volatility, the higher the standard deviation. And standard deviation is used to measure the price variation of the security and its relative risk. So now, how do we calculate the standard deviation? First, calculate an X period simple moving average. So the default period is usually 21, but in this example, we'll just use 3 period moving average. 3 period moving average. Let me get my pen out. Okay, so the averaging 3 close prices of 75, 65, and 55 give us the average of, could you guys type really quickly in the chat, what is the average of this 3 number without even using the calculator? That's right, 65. The fast fingers, I see. So the second step is to determine each period deviation from this average. So if this is the average, how much difference is this and this? Erase, okay. All right, so our first close is 75 here, minus the 65, we will get 10. Positive 10. Yes, that's right. But thank you. Thank you for your participation. And then we have 55. 65 minus, no, 55 minus 65, we get this negative 10 over here. Price. Okay. All right. So next, we will sum up the squares of each period's deviation. So our negative 10 square plus 0 square plus 10 square. So the answer is 200. So now with this sum, we have to divide it back by this 3, which is also this 3. Okay, so we get 66.666666, and then just round it off to 7. So finally, we will calculate the square root of this 66.67, and we get 8.16 as the standard deviation. So to answer Richard's question, we have 75, 65, and 55. Are they trading periods? No. So they are not trading periods. They are just the price. So we have 75. Imagine that they're in dollars. So $75, 65, and 55. So the average price is 65. And then we use the price to get the standard deviation of 8.16. So you can see that price is roughly, 8.16 above and below. Okay. All right. So now we got this standard deviation. That's the harder way to calculate. But let's see how we can interpret what we have calculated. So standard deviation provides an estimate for the expected price movement. So you can use this number as the risk of the security. So if price move greater than the standard deviation, you will see whether this price have average strength or weaknesses. So this move can also be used to spot overbought and oversold price conditions. Is it making sense so far? If you guys have any questions, just let me know. So now I will move on to Bollinger Bands. Okay, so how Bollinger Bands? Thank you. So how Bollinger Bands came about? They actually adapted the standard deviation into this indicator. So a little history. Bollinger Band indicator was named by the founder, John Bollinger, and he wanted to create a dynamic price channel that follow the price movement and accommodate for the volatility at the same time. So every different pair or security has its own catered set of bands to accommodate for their movement and volatility. So this indicator is made up of 3 bands where we have the upper and lower bands plotted by 2 standard deviation, but you can change this depending on the setting for trading view, but this is the usual setting, default setting that comes with it. Okay, and then these 2 plotted standard deviation are above and below a moving average. So because standard deviation measures the volatility, the bands will become wider when the price or security increase volatility and becomes narrow during decreased volatility, like a sideways trending market. You'll see the bands coming closer and closer towards the candles or bars or line that you have been using. So I see that John Bollinger has been pretty famous with you guys. We have Western movies, really? I don't know about that. And Richard has even met John in real life. So now we have Bollinger Band calculations. So the middle band is the 20-period simple moving average. Then the upper band, okay, this one, 20-period simple moving average, where you can see how it cuts through the price, right? And then we have our upper band, which is plotted 2 standard deviation. 2 standard deviation. And also the lower band that is plotted 2 standard deviation from here. Okay, let me erase the ink. So messy. Okay, so how do you interpret the usage of using the Bollinger Band? So one of the most popular ways to interpret the bands is using the squeeze. So when standard deviation has low values and the bands are in a squeeze, they come near to each other, like right here. So this implies low volatility. So when this occurs, it provides a signal that a large move up or down is to be expected. So after every market consolidation, we have like expectation of bigger moves. So a bullish signal is given as soon as the body of the candlestick closes above the Bollinger Band. So if it closes above the Bollinger Band, it's a signal to go long, like right here. You wait for the close, and then a bearish signal is given when the price breaks below the lower band here. Okay. Right, so one of the signal from Bollinger Band is a W bottom. So the W bottom forms in a downtrend. So for example, market is going down, making lower high, lower low, lower high. So this area where it came out of the band might be the first formation of your W. And then when we continue, it bounced towards the middle band. And then a new bottom is formed right above the lower band. So you can see this W pattern forming within the Bollinger Bands. Yep. Okay, so the pattern is only confirmed after a move above the last top. So the pattern is only confirmed here. So this is an indication for the bullish reversal. Okay, so once the band is formed, it may come back to the moving average before continuing. But we will test it out in the real market later because this one is the perfect example. Okay, so another opposite interpretation is the M top. So the M top is formed in an upward trend. So market is making higher highs, higher lows. So this is where the first part of the M is created at above the upper band. So it actually broke out of it and then it came back down to the middle and then created another side of the M near the upper band. So one attempt breakout, one pullback, another that came close into the band will signify a reversal. So the pattern is only confirmed after a move below the last bottom, which is here. Any questions so far? So yes, you can definitely use candlestick patterns to determine whether there's a reversal when it touches the upper or lower band. I think it's very helpful. gives you an additional confirmation. So imagine like this is one confirmation, and then the candles might be another confirmation. But usually when we're using our harmonics, M is like a bullish pattern. So depending on what kind of trading strategy you're using, and see how you mix it with your own other rules. Okay. Ta-da. So you see, even after the M has formed, price may actually do a little pullback. So a good entry might not be here unless you have a very high stop loss. And then before taking it all the way down. Okay. So Bollinger Bands also show whether price are relatively high or low. So if you're using it as price targets, when the price reaches the upper or lower band, it indicates that the movement is becoming far-fetched and a correction is to be expected. So even though this might be a bearish market, we can expect we wouldn't want to, enter here because price may do its little correction and you could get in at a better entry. So if price falls from the upper band and crosses the 20-period moving average, then the lower band becomes the price. So this is how you can use it. All these three lines. So from the band to the price target, etc. Yep. So from here towards here may be a confirmation. And from this cutting of the 20 MA to the lower band, maybe your take profit for a short position. And it goes on and on. So another interpretation, we have walking the bands. So during a strong trend, prices can move alongside the upper or lower band with many touches without going the opposite direction. So it may just, do this. Especially when there's like big news and everything is running one direction. So in a very strong trend, like a bullish trend, price may fluctuate just between the 20 moving average and the upper band. Yep. Okay, so crossing beyond the moving average may stand for a trend reversal. Yep. Okay, let's see the questions tab. Okay, so the question is, what if a long doji candlestick touch the lower or upper Bollinger Band? Does it show any indication? So for me, let's say if the band is going like this, and then there's like candles, right? And then a doji, and then another candle. To me, this 3-pinpoint pattern where you see here, here, and here is like the first move, and then the attempt to break, and then the I'm not sure if you guys can see that, but in order for a doji to be a good enough motivation for me to take a reverse, it has to show me a 3-pinpoint pattern, which kind of like looks like head and shoulders, but just in candlestick form. So like this. And if this happens near the Bollinger upper band, then I could add like another 10% or 20% towards my bearish bias to enter the trade. So other than this 10%, I will still need to look for another 90%, maybe in like Fibonacci or overall price directional movement. And how long has this trend has been running. Yeah. So the best is to mix multiple different strategies and get more confirmations before you enter the trade so that when you backtest, you also know how to tweak it. So I hope that answers your questions. Now we will move on to average true range. So this volatility indicator was developed by J. Wales Wilder. So it uses the volatility formula based on only the high to low range. So it will fail to capture the volatility from price gaps. Okay, so that was the previous formula that we calculated, where it will fail to capture the volatility from price gaps. And this is why Wilder created ATR, average true range, to capture this missing volatility. So the ATR does not provide an indication of price direction, only volatility, but it is such a popular indicator because it caters to every market based on their own movement. So this is, I guess, one of the most popular indicator that actually doesn't tell you which direction to go. So here are the calculation. So the true range is defined as the greatest of the following value. So the current low minus previous close for this first picture over here. We have current low minus previous close. So this is today and this is previous. So current low is right here and previous close is right here. Okay, and then for the next one, we have our current high, which is right here, minus the previous close. It's right here. So the last one is the current high minus current low. Okay, so the average true range is a moving average for a true range of specific time period. And usually on our default setting, we use 14. And for me, I don't change that setting because 14 is pretty good. So the high average true range value can warn traders of potential market tops and bottoms. So a low average true range value can also indicate a ranging market. So many traders use the average true range as their initial stop loss. Okay, so if you see a bullish reversal with an increase in ATR, it shows a strong buying pressure and reinforces the reversal. So for example, like what we mentioned about the bands and specific candlestick patterns, and then you add it on top with a strong ATR, maybe another, in total you might get 50% confirmation of whether you would like to take the trade. So, and a bearish support break with an increase in ATR shows how strong the selling pressure is, and it reinforces the break. Okay, so now we can go into the charts. If there's any questions, please let me know while I drink some water. I see that some people have just entered the webinar. So let me know if you guys don't understand anything. I could go back and do a little recap. If not, we can just go into the charts. Type a number 2 if there's no questions. Okay. No questions. Let's move on. Okay, so right here we have our Bollinger Band. I'm using Aussie dollar on the daily time frame. So here are some examples of the M pattern. Okay, so you see we have this bullish, higher highs, higher lows, and then this is like the first initial M, and then it broke out of the bands on top, and then it came close to the band again. So the M pattern is complete when this previous low is taken out. So come back here, pull back before heading down. But if you're not using the M pattern, you can also take the short trade from here towards the lower band. Okay, so let's see. Okay, let's go to another example before I move on to our request for Bitcoins. Okay, so for example, this is not a good M pattern because you see price is actually making this move here. So what could have been a better pattern out of this current view that we're seeing is a W pattern from here to here. Okay, maybe just like this. So you see that price is doing this lower low, right? And then it broke out of the band, came back to make a high, and then came close to the lower band. So the W pattern is formed, completed after it takes out this area. But there wasn't much bullish movement before it went back towards the downside. Okay, so let's see if there's any more other examples here. W, nope. This one might be one, but you have to really have, good eyes to spot it. So first, broke out, came back in, came close, took out, not really took out, but reaches the previous low. but then it went down instead. Okay. I'm not good at Bollinger Bands yet. Okay, let's go into Bitcoin to see if there's any movements. BTC USD. Oh, which one? Okay, let's try this. Okay, wow. See, Bitcoin is just currently walking the bands. So this is what it meant by just trading between the upper band area. So I think a lot of people are actually flocking to Bitcoin right now. So Vincent says that it exploded yesterday. Oh, this is really pretty explosive. It's 7.67% in one day. Yep. So let's see what can we do with this. I think it's not very wise to just use Bollinger Band by itself, because I was thinking like if you took this entry for long, you only actually take your TP to here, which is where the upper band is. And then it never came back down to this average. So let's see if we edit our Bollinger Band. We can change its standard deviation to 3. Then you might have a bit more profit. So I see some of you guys actually use the Bollinger Bands. That's really good. So if I change it back to 2, let's see if there's any squeeze. Yeah. It was coming pretty close. Let's see the ATR. So during this period of time, you see how the ATR value just constantly drop and drop and drop. So the bands were getting like tighter before like making a move. So you see our ATR is increasing because of the average of all these candles. So this is probably 14, yeah. So it may represent the strong bullish momentum. Okay, so another request of the pair is Euro Aussie. Oh, it's so good to see like some volatility going on. The ATR currently is 119 pips. That's very good for traders like ourselves. Let's see if we can find any reversal patterns. So this is a W, but price continue to do a sideways consolidation. I think in daily chart it's just very hard to see any opportunities. Let me go down to the 1 hour and see whether there's more trend there. Sometimes my chart does that. So let me just, okay, I have no idea why those lines are extended. Okay, that's better. Okay, so we see here we have our little squeeze and then a break to the upside. So we have a break and a retest and a continuation. Then here we have a break towards the upside. Consolidation, right? And then break to the upside. Take out all the stop losses before going the direction that it wanted to. So currently Bollinger Bands is not really working well with this current market. Let's see. What if I change this to 2.5? Okay, it's like holding on to the prices a bit better with more standard deviation. So if I try it on one of the major pairs, Euro USD, change it back to 2. Let's see if we can find more opportunities. Okay, we have breakout, came back. This is the previous low. So this could be our potential M. Took out the previous low. So it's a reversal. If I calculate the pips for an hourly chart, if you got out at the perfect timing, it's only 39 pips. So far, not exactly my cup of tea. But do let me know how you guys are using it because I might be missing something. So this is a very beautiful trend downwards after this squeeze right here. So if it was me, I would wait for the breakout, maybe a little retest before going down. However, if I see like the price is actually moving outside of the band, I might not be that inclined to take the trade because I'm expecting some form of reversal. So even if I were to take it, right at this second breakout, within another few hours, it would have went back to my break even. Do let me know if you guys got any other pair requests. I can try to use this with my other method. So I can combine it with the use of ATR and hopefully the Bollinger Band. Okay, let me go into the 4-hour. All right. So for example, if I'm using USD, Euro USD, and right now it's sort of overall is still a bullish momentum, right? If you can see, higher high, higher low, higher high, higher low, and looks like it's about to make its way to a higher high. It just, like 3 days ago, broke above the 20 MA and has reached the top of the band. So we might be looking at a possible reversal with this short-term, just a short-term pullback, with this point that it is at right now, having previous resistance, right? Okay, so let me go into 4-hour and see if it still says the same. Okay. All right, so what I can see here, lower high, higher high, higher low, higher high, equal low again, and then it just broke through to the upside. So yes, this one, in the 4-hour view, I'm also looking at a possible bearish reversal. So now I'm going to use my Fibonacci. From low to high, open up all Fib levels. Okay, so our middle band is crossing with 23 and 38. So I'll just leave that 2 levels there. Okay. Let's see, the ATR is currently showing me 23 pips. So let's say if we're expecting a reversal immediately right here, we can pull it towards the middle band, which may be safer to say that if the next candle form, it might be at the 23 area. So if I pull out my short tool, we have a potential of, let's say 27 for our stop loss. 23.5 actually, 23.5. Around there. And our profit of 34. Oh wait, I got the wrong side. Let me take the short one. Okay, 23, right? 23.5 and TP 36.1. So risk to reward of 1.52. So this is our attempt to forward test, but let's back test it. Mixing Bollinger Bands with ATR and Fibonacci. So I'm going to take my playback, replay tool at any random time. Okay. So this is also my first time trying it. So if there's any suggestions, just let me know. We can all test it together. So the last move was from, okay, let's see. Looks like a bullish momentum. We have high, higher low, higher high, equal lows. So bullish bias, but very low ATR volatility. So how much is this? It's 27 pips in a 4-hour chart. It's pretty low. So let's say my bias is bullish. But it's equal low. Supra Fips. Okay, so this looks like it's coming into a little squeeze because you see our ATR is going down and price is like ranging along this 38.2 to our last low. Okay, so where would be a great entry? Maybe a break above all of this and a retest before going up. If not, it's a break underneath the lower band as well and a retest before continuing down. So let's see what price does. I'm going to leave my 38 and 0 there. Okay, let's go. Oh, a break, a retest, came back down to the middle band, tried to break and retest. No, now it looks like it's forming a new consolidation, but it's still in a bullish momentum because it's trending right in the upper band. But nope, look at that. Still not increasing its ATR. 4-hour Euro USD. Okay, there's a break, which is a potential downside. So you see how these bands are following price. So at this area, I might be looking for a bearish momentum already. But if I was still using my previous Fibonacci, it would have just broken nicely and came back down. So you see like this entire side has shown us that this 38.2 is actually not a very good indicator. So I'm going to delete it and draw new Fibonacci based on the recent data that our price has given us. Okay, bounce off of 61.8, went back almost to 0, but is at 50 currently. So I'll put 61.8 because this is another new sort of consolidation right there, and see where price breaks and retest. Broken to the bottom band, increasing. You see our ATR is increasing. So that was a bearish movement that we could have taken off of 61.8. Let's see in a smaller time frame. Right at this circle, we have our nice break and retest. So this was the break, this was the retest, and the continuation. Okay, and then by this moment in time, you can see the ATR is already super high. So, and it's walking along the bands. So we might, just want to take our TP and let the last 10% run because, and move your stop loss to break even, and let's see. Oh, exactly. Reversal back into the middle band. We can delete this already because since we drew our Fibonacci over here, price has given us all of this data. So that Fibonacci itself is not as useful as when the price is around here. So now we have everything here. Okay, so that is sort of one way that I can use the Bollinger Band. I'll continue testing it. Yep. So once it broke, the middle, it's like a upward trend. Let's see if we can find any. Oh, and then the ATR is also slowly moving down. So I will look for consolidation when ATR is around this level, and then I'll look for breakout. So let's see ATR. Dropping. Okay, it's roughly around this level. So before it increases. Play it. So it's very beautiful. So far we can see that if I were to just use the ATR for, instead of using it as oversold and overbought, maybe you can just use a line. For example, like over here, this one can be like a resistance area. When price comes close, like a volatility, overbought, oversold. So we see when price is like so volatile, it reverses. And then when it came close to it, it also loses volatility. But if we're using it to spot the other way, we can also put line at the bottom. So the moment price comes close to this support area, it increases volatility. So it doesn't say the direction, but it's just the volatility balance. So if I extend this back, increase in volatility and slowly decreasing. Okay, let's continue playing this. Dropping, dropping. So I mean, that's just one way you can use the volatility indicator that we have mentioned today. So, okay, how about RSI or CCI? Yep, so like what I mentioned regarding the ATR, we can also use our RSI for the support, dotted support. Where is it? Support. No, not this one. Intermediate support. So like this. So we can just ignore the bands. I'm just going to remove the bands and leave the RSI there. Bigger. So if I just put this at the bottom, where you see prices, the RSI has previously tapped on it or came close. And then I just draw a line above. So this was where it tapped the RSI. And then the moment it comes into this like support area, it bounces off of it. Does a little reversal. And then over here, does a little reversal. Came close. And it's also outside the band. So over here. Okay. So I guess what we can do is look at how it has been with the bands and how it's reacting off the RSI. So you see here, it broke out. Tap it again. And then when it shows a little reversal in the RSI, it's also reversing back into the trend. Into the Bollinger Bands, I mean. So over here, yeah, this could have been a trick you moment, you know? Like it broke out of the band and then it showed a little reversal over here. And then it went into the band again before it actually came back here to tap exactly at the previous level, which is our 22.27% before it went back in. And then here, a little breakout. Wouldn't have been much profit to be made, but maybe you can just practice your eye for it. So right now we see, let's say if I'm using the last area where it bounced and came down, resistance, okay. So why I picked this point is because if I scale up, this is the area where it actually made the push down. Okay, so let us play and see how it goes. So it broke out of the band, but it hasn't tapped on this 22% right here. So I'm gonna keep waiting. Okay, so here we have a tap on the resistance and market sort of broke out. But overall, the Bollinger Band are coming close to the price already. So even if you were to enter a short here, your TP might just be over here. So if I were to calculate a short, it's not that rewarding also. So the only moment you might be able to enter is after this red candle has been formed. So if you put your stop loss just outside of the bands, your take profit is only 0.73 risk to reward. So let's see if a low risk to reward have actually rewarded you. Okay, so you see, like when we targeted here, price hasn't touched our TP, but our our middle 20 MA is actually moving upwards. So each and every passing hourly candle, your TP is getting lesser and lesser. Oh no, hit stop loss before it actually gave you the dough. So I guess during this period of consolidation, everybody was building up their position for short. So you're not the only one who sees it. So there's plenty of short, as in plenty of stop losses placed at all this level. So it took it out and went the way. So this is what we have currently. There's plenty of opportunity, but I guess for me right now, Bollinger Band is not one of my strategy. So I'm sure that you guys are using it so much better than what I just shown. Just keep back testing, and if you guys have any proven strategy, let me know in the next session. Right? So if using RSI, which is the best time chart range to look at, to use. So my favorite time frame is actually the 4 hours. And whatever indicators that I am using currently, I would just test it on the 4 hours itself. But depending on your own, yes, it's more accurate on higher time frame. I agree with it too. While Vincent is going into daily and weekly. So for me, depending on your own trading strategy, for example, how many times you can check the chart in a day will determine what time frame is best suited for you. So in the past, when I can only check the chart once a day for my old job, I was using the daily candle, daily time frame. So every day it gives me one more information. Just one information to tell me whether I should continue to be in this trade, or exit, or move stop loss to entry. So if you're someone with a bit more time, maybe you can go into the hourly and even the 15 minutes. All right. So I hope that this session today has helped you on your trading. So thank you all for joining the webinar. I hope to see you guys soon. Take care. Messi. Thank you.